So it's come to my attention by honestly just personal experience that a lot of people don't actually know anything about how to properly invest, or at least the way that I've been doing it that's made me thousands of dollars by the age of 20. I'm going to be explaining to you guys how I've gotten further ahead than most 20-year-olds have by just investing the smart way. Not some get-rich-quick scheme or some other bogus like that, but also not like some boring, put your money in a high-yield savings and it grows at 4% per year. Listen, I don't know about you, but I ain't got enough time for that. So the very first thing that I think people are just getting wrong in today's age is that you have to be a trader to invest. And no, I don't actually mean like a day trader, but I mean people think that you have to time the market to actually be putting money in there that will actually be useful for you. This is honestly the entire reason why I'm making this video. I overheard some people at work, they were talking about how that they're gonna wait to invest more into the market because we're at all-time highs. And no, we're not talking about people who are like swing trading or stuff like that. Like, we can get into that later. I'm talking about people who want to invest long-term. And I'm like, this is going against your interests. And why is that? Why do people get this wrong so often? Doesn't it make sense to buy low, sell high? Well, of course it does, but guess what? No one's a fucking genie. And the fact is, a lot of people think that they can time the market, even just like implicitly, like, oh yeah, we're at all-time highs, so why would I put more money in? Well, we've been at all-time highs before and it's risen exponentially. This is the point of the market. The point of an overall well-diversified portfolio is such that you can dollar cost average into it and not have to worry about where the price is at, because you're gonna have such a long time horizon that it won't matter. And in fact, you'll actually, in the end, save more money and have better gains because you won't be worrying about timing the market. And also the stress. Who wants to know every single time the market hits all-time highs or there's a 5% dip? Who cares? Listen, if you want to add more and do some swing trading, that's awesome. But for people who just want to coast it out, like for my main retirement account, I do not give a shit if the market goes up 10% or if it goes down 40%. It's so long term that it doesn't affect me whatsoever. Honestly, what's made me the most nominal dollars, not percentage wise, but the most actual dollars, has been dollar cost averaging into index funds in just a regular brokerage account. I started my stock account at less than like $2,000 and it's more than 10x. This strategy of just simply dollar cost averaging seems very simple from a high overview, but so many people just get it completely wrong, and they think that just investing in the S&P 500 is enough and they can kind of do it whenever they want. No, you want to have a plan that consistently works for you. If that's all you did, you'd be a great investor and you probably will beat the vast majority of your peers. But the second thing I see people doing wrong is investing in stuff that they don't know about, or getting lucky once and then thinking it's a strategy, right? If you're gonna have a strategy in the market, for example, let's say you want to go swing trading. That's what I primarily do, trading wise. So I think I could speak to it the best. In fact, I just, took out a position. I just actually sold out of a position in TQQQ, and it was up like 80% or something like that, gained like $3,000 in a couple months. So the thing that people also get wrong is trying to trade or trying to buy into stuff based solely on news, or being afraid because of news. If you're going to be trading based on news, what you need to do, instead of actually seeing if the news is good or bad in the short term, what my strategy has been in like sort of the medium term is seeing, is this good or bad news, right? And then what you need to do from there is you got to determine if what happens to the stock market after, right? You're gonna wait a little bit. You can catch news, but that's personally not what I've done. I've personally waited for the market to react to news, right? And from there, what you do is pretty simple. You say, do the fundamentals of the companies change based on this news? And if so, how much? From there, you want to value whether the market seems to be overreacting or is reacting properly. So for example, this recent Iran war thing, right? Everyone was scared out of their mind. The selling caused more selling. But I saw an opportunity and I bought pretty close to the bottom my triple leverage NASDAQ. You know why? Because the fundamentals of the technology companies changed very, very little compared to the intense market reaction caused by this war. You'll see broad indexes going down because of temporary changes in oil prices, right? And for me, that's a green flag to buy. People were way overvaluing, and now way undervaluing companies, and now we're back at all-time highs. So what you need to do is stop trading based on, following the trend necessarily, or trading on news when it first comes out. You want to see what the reaction is to the news and then follow thereafter. And the reason why is because typically, if there's a large drawdown, there is a large V-shaped recovery. Now, again, this is all dependent. For example, 2008 financial crisis. That one, I don't know if I would have swing traded to the upside because the fundamentals changed drastically for companies, right? But Trump's tariffs, for example, very bad at the beginning. I agree. I sold. I got some good tax loss harvesting out of it. Beautiful. After a few weeks, you notice how the tariffs actually didn't change the market very much. And even if it did, it wasn't enough to bring it down to how much it was down. And that's when you invest more. Again, another play I made multiple thousands of dollars on. So this is what people get wrong in the trading atmosphere, is that you have to be super reactive right off the base. How about a reaction to the reaction? That's how I typically have gotten the most payback. And also another thing people just tend to get wrong is that you have to be capital intense to actually make money in the market. And this is absolutely untrue. I've literally started accounts, from like $100 and like 10x them, right? And doing like stupid risky stuff, right? So you can, even if you have a little bit of money and you want to go into like trading or something like that, you can always test the waters, and as long as it's not going to hurt you financially, you'll be all right. And guess what? If you want to just have that long-term growth and not have to worry about trading and blah, 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 it's just too much for you. You're like, screw that. For every $100 a month you put in from the age of 20 to the age of 65 is $1 million in retirement. And that's being conservative as well. So even that little bit of $100 a month, which is like, again, like $25 a week, which is 10% of a minimum wage job part-time. Well, at least when I was working minimum wage at like $12 an hour. And honestly, just that there has gotten me so much. And once you see the compounding grow, it's not gonna stop. And that's why you shouldn't ever also take out of your accounts if that's not the purpose of them, right? Your retirement account should be for retirement. This is a major mistake I see people doing, is taking out of their retirement accounts to fund bullshit or fund things like a house, which is ridiculous in my opinion. Why would you be taking out of a asset that is creating money to put it in a illiquid and very costly asset that may or may not go up, and even if it does, it's not at a great rate. Anyways, I digress. That is just one thing that people get wrong about investing, though, is taking out their money from the market before it's able to even do anything, because they don't think they can start on low capital, and you absolutely can. So I really hope these things in this video have helped you out, maybe shifted your mindset a little bit. It was kind of just a short video to help explain how I've been able to make over $10,000 in the market without doing some crazy day trading things and not really having such a complex strategy. It was just consistency and a discipline, and in addition, finding out some strategies that seem to be obvious, however a lot of people just overlook because of their emotions. Anyways, I hope you enjoyed this video. Make sure you guys subscribe so I can see y'all in the next video. Peace.